What's going on, everybody? Happy Saturday to you. I cannot believe that this is the last Saturday in January. Like the first month, poof, going by so fast. It's kind of insane. We as a family, we've had so many crazy things like people passing away and it's been kind of a wild January. At the same time, lots of people are deciding to move here all at once, which is amazing. We're like just super, super lucky. But today, I want to talk to you guys a little bit about what's going on here in Central Florida. And first off, where are you guys watching from? That's my favorite part of the show, to figure out where is everybody watching and diving in, that kind of thing. We already have people checking in from Western Kentucky. What's going on, Wiggy? What's going on, Ben from Central Jersey? Appreciate it. The Range Rover is driving fantastic. Thank you for asking. What's going on here from Mequon, Wisconsin? 15 minutes north of Milwaukee. Happy Saturday. Good to see you. We've got some people coming in from New Mexico, Long Island. Hello, hello. Helen, good to see you. Always hanging out with you every other Saturday. I so appreciate you hanging out with me. This is awesome. Here's one from Denmark. Hey, Annette. Good to see you. Very much so. Judy from Winter Garden. Awesome. It's so cool to see people from literally all over the world that tune in. We've got such an international market here, which I think is super cool here in Orlando. So we've got, let's see, people from Dallas hanging out with us. So awesome. All right. So today we're getting into a few different things, which I think are most important, which number one is going to be interest rates, what's going on in the market. And for that, I have one of my favorite guys here, Greg Matthews. What's going on, buddy?
Man, how's it going?
Wow, it's going well. So, so first off, Greg, do you pay to be on the podcast?
Definitely not. 4-finger discount.
So here's the reason why I have Greg on. Greg's like my personal mortgage banker. I mean, we've closed a couple of deals. You just refinanced our personal home. We're closing on an investment property this week. And the reason why I like Greg is he just has his ear to the market. He's really sharp. He's got a good system for back end stuff. And so for that, we bring him on to kind of just pick his brain because yes, I sell real estate. I see interest rates come across my desk every single day. But I know more of the real estate side. He's a little bit more on the finance side. So today we're going to just chat a little bit about what's going on in the market, what we're seeing, how this affects Orlando. That's what most people are tuning in. And then we'll talk about some stories and that kind of thing. Does that sound good?
Sounds good, brother.
Awesome, man. So, man, there's been a lot of changes over the past month, right? So we got hit with a positive thing where conforming rates or conforming mortgages amounts went up, right?
Right.
What did that go from and to?
Yeah, man, it went from 548,000 to 647,200. So almost a full $100,000 increase.
Absolutely
in 1 year.
Insane. In 1 year. Yeah. Usually it was like, because the year before that, it was like a $25,000 jump or $17,000 jump.
480. Yes. No. Yeah. So it already had gone up like 50 or 60 and then went up 99.
Yeah. It's crazy. So, and so what did that do for people? You know, if the conventional mortgage rates all of a sudden went up or the limits went up?
Yeah, so the limits going up helps a lot, Ken. Just for people that want to stay out of the jumbo loan category, sometimes you have a little bit stricter guidelines on jumbo. And not that it's always harder, but conforming conventional is your standard loan. And so someone that's looking in the Orlando market that we're seeing homes, especially as you know, it's grown so much, get into that $600,000, $700,000, $800,000 price point. Sometimes that's like a standard home for a family of 5 or 4. You know, I mean, that's what they're going for in these really nice up and coming areas. So that helps that family get into a conforming conventional loan rather than having to go into the jumbo loan category and just jump through some more hoops.
Yeah. And speaking of that, there was this actually popped up on us just this week. So Orange County home values skyrocketed more than 30% in a good majority of the zip codes in 2021.
Right.
Last year, 35 out of 38 Orange County zip codes included in this analysis by the OBJ experienced home prices gains of 30%, which is massive. I mean, we would talk all the time about, you know, prices are crazy. People are like, you know, can I afford it? But now we've been telling people interest rates are coming. Yes, prices are going up, but you need to jump in now before not only are the prices expensive, but the money is expensive. So talk to us about that. What have we seen over the past 2-3 weeks?
Yeah. And so, I mean, definitely all of the information was telling us in Q4 that going into 2022, at some point, interest rates were going to go up, right? We're talking inflation. Everybody can feel it. Gas prices are higher. Heck, the cost of a gallon of milk has increased. Everything's increased across the board. So, that inflationary pressure causes rates to increase? Well, the Federal Reserve, that when everyone says, oh, they're increasing rates or whatever, the Fed, they said they're going to have some rate hikes in 2022, expecting 3 of them. So that means they're going to increase the short-term interest rate, which has an impact on long-term interest rates like mortgages. But it happened really fast, dude. I mean, like January 3rd, the markets opened back up after the holiday weekend, and immediately we saw mortgage bonds trade pretty poorly. And so the increase on an average mortgage probably went up like 0.5% to even 0.6, 0.7% just in the last 2 to 3 weeks. So,
all right, so that's all sounds very nerdy and very like we all hear about points and what does that even mean? So let's talk about this. So for the average, $400,000 or $500,000, I know I'm putting you on the spot and you're not a human calculator, but for the average person, what does a 0.5 point jump mean?
Yeah, I mean, it probably means at least like around $100 a month in payment. So, it depends on the loan amount and a lot of different other factors. But yeah, approximately $100 a month, I would say in most cases.
Yeah, but really, you looked at Fannie Mae. They had talked about how they didn't think rates were actually going to jump as fast as they were going to. They had anticipated only a little, like a slowly 0.25 point jump over the entire 2022. And then here we are a month in and it jumps a 0.5 point.
Jumps. Yeah. And
so
that's the one thing that we're looking for, Ken, is some stability. The interest rates themselves don't matter. What we need to have is stability where people can feel comfortable that, hey, I got pre-approved on a Tuesday. My rate and payment isn't going to jump $200 by Friday. That's what we don't want. That as far as overall market economy, everything like on a macro scale, if the rate is 4% or 5% or 6%, doesn't matter. We want to make sure that our buyers know, hey, this is what to expect. I go under contract, I locked in. A lot of people in new construction, they're 6 months out. You can't lock in a rate for 6 months. The lenders won't guarantee it for that long. So people are going under contract now to close in July. They just got to ride with it. Whatever happens, happens. So that's what we just want, is a little bit more stability, which it did stabilize this week for sure. After the first 2 weeks of the year being pretty crazy, we've started to hit a little bit of a plateau and more stability there. So that's good.
So talk about that. So how long can somebody, if they're going new construction, and listen, we sell a ton of new construction right now. I mean, it's like darn near 40% of the business in our team is new construction. And so how early can somebody lock their rates? If they're coming to Orlando to buy a house, second home, first home, whatever it is, how early can they lock their rate before closing so that they know exactly what their payment's going to be?
Yeah, that's a great question. So you can lock your rate in increments of 15, 30, 60, and 90 days, 45 as well. But the max right now is 90 days. A lot of lenders were offering 120 days, and some of them are pulling that back down to 90 days because of volatility, right? Like if the rates were staying the same forever, they'd let you lock for 6 months, but they don't get to sell that loan on a secondary market to the end servicer until it closes. So if they guarantee you a rate of 3.5% a day for closing in June, they have to basically hold that paper on their books. And if the rate goes up, they got to pay that difference. I mean, it's very complex financial stuff, but in layman's terms, like basic stuff, is just the cost of borrowing money for longer is a higher risk for them. So they don't want to do that,
Yeah, makes sense. We got a bunch more people checking in here. I just want to say hi. So Barry, what's going on from Dr. Phillips? That's where my office is at, like right by Flippers. You know where this is at, Greg. This is like right by our office.
Yeah.
So hey, we've got people, Mount Dora Burr. Listen, it is cold today. I was chilly. We were thinking about going out for a little drive there just to get out of the house. And we were wearing jackets and sweaters and stuff just to get out. So it was a little 50 degrees in Florida. That's like basically 0 degrees to me.
Right. Well, if you're living back in Michigan still, you'd be in shorts and a t-shirt. But
oh my gosh, man. Like, Emily Berry, one of our agents on our team. What's going on? She said, hey, Ken and Greg. So here's a question from one of the people watching. He says, how much more difficult is it to qualify for a jumbo approval, right? We talked about the difference between the conventional loan limits. So how much more difficult in today's market is it even to get approved?
Yeah, there's just a few different intricacies that go into a jumbo, Ken. Like you're going to have debt to income ratio limits that are a little bit tighter, just so you have extra discretionary income in case something happens. When someone has a large salary job and say they want a $2 million loan, well, if you lose your $30,000 salary a month, that can really impact you. So they want to make sure you have a ton of extra money there, because you might not be able to find a job in that same category. There's a limited amount of jobs in that space. So it just gets a little bit trickier there. And then also reserve requirements. Sometimes it's like, hey, we got to have 6 months of extra money. Like a lot of people sometimes are putting, all their retirement or money they've been saving up for a few months as a down payment to cover down payment and closing costs, and they don't have much left aside. And by reserves, I mean reserves for monthly payments. So say them, and a jumbo monthly payment might be $4,000 a month. So if you're required to have 6 months reserves, that's $24,000. That's a lot of money that you got to have just in cash. You can't say, oh, I own a vehicle I could sell tomorrow, or I own this business. No, it's got to be in cash. A lot of times people in that jumbo range, they don't sit in cash a lot. So just little things like that, but it's not crazy harder. Just a little bit more hoops to jump through. So
yeah, it makes sense.
Yeah,
that makes sense. What's up, Joel? Watching from Tampa. Tampa's blowing up too, man. Tampa is leading Orlando a little by growth right now. I don't know. Maybe I think it's just by the bay, but when you look at, I don't like hurricanes, so that's why I'm in Orlando.
I think Tom Brady might be helping out with that too, man. They're doing good over
there.
Dude,
I tell you what, people are like, yeah, we want to be in Tampa Bay. I don't know, something like that.
Yeah.
What's going on? All right. So I've got a few other questions here for you. For one, how does like the stock market affect rates? Because I look over here, the Dow Jones is definitely taking a dump. Bitcoin, this was an interesting thing. Bitcoin was up to like almost 60,000, 50, like 47,000, something like that. And it's down to 34,000. I know a lot of people were investing back and forth between crypto and the stock market. And how does that affect our interest rates?
It definitely does. But historically speaking, when the stock market goes down, that means money's flowing out of stocks and into bonds, which is good for interest rates because the bond market, more money people are like, oh, stocks are unstable. I want to put my money in something safe like bonds. And so that drives the price of the bond up, which drives the rate down. But we're kind of just in that weird post-coronavirus economics world that doesn't make a ton of sense, because as the stock market kind of took a plunge this week, bonds also did. But like I said, they rebounded a little bit, and they're coming back. The 10-year treasury note also has an impact. That's something that we look at a lot. The 10-year T-bond, as that's rising, it's like at 1.8, something like that. If that hits 2, then that means rates are just going to really start to skyrocket. That's a 52-week high is 1.8. It's been really high. So that's what really caused the rates to increase. But historically speaking, it's good to borrow money when the market's down. So
yeah, that's kind of what I was thinking as well. Somebody mentioned here that the stock market's crushing their retirement plans, and so it's like, well, I don't know. That's why you diversify, right? Like if you were all in on crypto right now, you are hating life. But if you're diversified, you got some real estate, you've got some crypto, you're in the market, you're sitting on some cash, bonds. There's no way you can be all in on one thing in today's market. It's just all so volatile,
Sure. Yeah. That's what most financial advisors will tell you right away is diversify.
Yeah. So here's a great question today. Rob asks, any difference between using a mortgage company or my local bank?
Yeah, it's a great question, Rob. And I'm not the kind of person that's just going to say oh, we're across the board better than everybody. Right. That's not the reality. You got to find what fits for you. There are a lot of clients that you've referred over to me that I've talked to that they're like, hey, I've been working with this bank for 30 years. I've done a few mortgages. Why should I choose you? And so I explain our process. Hey, you're talking to me on a Saturday night at 8 o'clock right now. I'm available. Your banker's probably not. But if that's not as important to you, and the fact that you can walk in your bank on Monday morning and shake someone's hand, I'm in Orlando, you might be in Ohio. I'm not going to be there to shake your hand. We're going to talk over the phone. So it's just a different feel for different things. But I will say one of the competitive advantages that we have, Rob, on the mortgage banker or mortgage broker side of what I do as opposed to a bank is we have an unlimited amount of products. We can sign up with any personal lender out there. We're already signed up with over 30. So if you have a unique situation, I've got, a little bit lower credit, or I've got, not as much down payment, I might need some assistance with that, or, you're self-employed and you don't have enough money on your tax returns, you got to use a bank statement program, anything like that. It's a little unique. We have that solution. And so if you go with your bank and 2 weeks before closing, they're like, hey, this is an issue, it doesn't fall into our guidelines, they have an alternative solution. You're going to have to go somewhere else. That bank is stuck to just their guidelines and their policies. And a lot of those companies, those big banks, they put what are called additional overlays on loans. So our Fannie Mae guideline might say you can go to 50% debt to income ratio, but a bank might say, well, even though Fannie Mae allows you to go to 50, our company policy is only 45. And we do see that a lot where they put those additional overlays in where they're denying people that we can work with. That happens on the new construction side a lot too, Ken. You'll see people go with the builder's lender and the builder's lender will turn it down. I'll take a look at it. I'm like, this is a great loan. We'll send it right in, and we end up closing some of those. So
I think what it comes down to is accessibility, better systems, and more options. That's really it, right? And so will you always be the better rate? Not always, right? Sometimes Wells Fargo and Chase are the better rate, but they're terrible to work with. Like as from speaking from experience, they are. But if you're very rate conscious or cautious or whatever that might be, and it's not a huge difference. Usually it's really small. Always look at the two. For me, I go over service.
Yeah. And I've beaten banks too. I mean, it's not always, it just depends. I mean, it's a case by case basis. You talk to me at 9 a.m., you talk to them at 11:30, things are happening. I mean, it's happening that fast. That was something else I wanted to mention about rates was like back in the day, they used to print out rate sheets. I'm talking back in the day, 5 years ago, you got a rate sheet and like, unless something catastrophic happened, that pricing was locked in for the day. Like it was on a document that you went and priced out. Now it's on the computer. So if the stock market does something or the bond market does something, like the lenders will update their rates right away. So that's where I can literally talk to someone at 10 a.m. like, hey, we need a lock. They are like, give me 30 minutes. I'm like, I hope 30 minutes is, okay, but something could happen in that time. They're updating this stuff instantaneously. So yeah, it's crazy.
Yeah, right on. Yeah. All right, let's jump gears here a little bit. Just talk about a couple stories, and we'll get back to mortgages along the way. And definitely, as you guys, make sure you drop some comments below if you have questions about mortgages for Greg. He's here to answer them. If you guys have questions about real estate, that's what I'm here. But we're going to talk a little bit about some of the questions that you guys have. First off, so Spencer asks. Spencer and Fam says, any insights into how the I-4 ramp development near Crossroads 535 will affect access to Disney from locals not using I-4? Windermere and timeshare owners near 535 come to mind. So this is actually what the new I-4 535 exchange is going to look like. And a lot of folks, if you don't know where this is I-4, which is like currently the bane of existence for most people that live in Orlando. And then this is 535 with like access to Disney Springs kind of down over here. So right now there's like a McDonald's and there's like a ton of stuff right here. And this is all going to get completely changed. And so your question of how is it going to affect people living in the Windermere area, this will actually just get better. Like access on and off of I-4 is going to get better, more improved, less crazy traffic in this area. Hopefully it just increases traffic flow. But the Florida Department of Transportation spent I think it was the biggest one in Florida Department history that they did eminent domain to buy this little piece of land from Disney to put this interchange here. So that's how important that they see this is. And so I just think it's going to be a positive for the people in the area. So that's a really good question.
Eminent domain. He's dropping the real estate exam course knowledge. Look at this guy. He did his continuing education this year.
Man, I tell you what, dude, it's you take these classes. It's so funny, and you probably do the same thing with mortgages. But you take these classes to get your real estate license, and you're like, I'm never going to use this stuff. But every once in a while, I reach back. And all right, let's ask a couple more questions here. What's going on, Jim O from Davenport? Jim actually works for a new company over in Simcon over in Lake Nona area. The town center over there is insane. Have you been to Lake Nona lately?
I haven't, man. I saw you were over at the hotel that they threw up recently and stuff.
Yeah, we did a video.
Picture of the bull.
Yeah, we did a video that's actually coming out. I think next Saturday. Just at the Wave Hotel. The library over there, or the living room, they're calling it, is at the Wave Hotel. Let me show you guys this. This is so cool. So really, the Wave Hotel is a lot more than just a hotel, and the way that they're positioning it, it's really more like an amenity for the Lake Nona area. So let me show you some of this. So this is like this is what the living room looks like. Oops, let me go on this side. This is what the living room looks like. You've got like all of these pieces of art, and it's really more like they've got bars and restaurants and all this stuff in the Wave Hotel. That is really, if you live in and around the Lake Nona area, it's going to be somewhere you're going to want to hang out. I mean, like every time I'm in this area now, I'm hanging out in the lobby or grabbing food with people. It's going to be really very cool. And they're putting retail all around the hotel. It's cool. Awesome. If you stay at the hotel, they allow you to you get a free access to the performance center, which has like just insane. I feel like $1 million worth of equipment. It's very cool. So anyways, we did a whole tour of the hotel behind the scenes and got a sneak peek of what's coming. It's going to be pretty cool.
Nice, dude.
Awesome. Yeah, dude. It's very, very cool. All right, let's keep rolling.
Sweet.
So, okay, here's a question I have for you. What's the difference between an FHA and conventional mortgages right now in regards to rates? Are they pretty big of a difference? Somebody mentioned 30-year fixed 3 down, no points, something like that.
Yeah. No, I mean, it just depends. Case by case basis, of course, credit scores, down payment, debt to income ratio, all that stuff has an impact. But they're pretty
Your
comparable.
PMI, you're going to have PMI if you go FHA.
PMI, yeah, FHA
Yeah.
has the PMI that still stays for the life of the loan. That's the one downside that a lot of people see. However, if you're putting a low down payment, 3.5% down, whether you're going conventional or FHA, it's usually, if you're making the monthly minimum payment, it's gonna be 5 to 7 years before that PMI goes off. Most
Yep.
people buy or sell real estate every 5 to 7 years. So if
Yeah,
FHA
true.
makes sense for you, like where you're at, I mean, we go through all options, especially with our buyers that are right on the fence of like conventional and FHA. I'm like, here's your conventional 3%, conventional 5%, and FHA 3.5%. Let's talk through the advantages and disadvantages of both. The rates are usually pretty comparable. If you have a lower credit score, Ken, moderate credit, I'll say like mid 600s, even up to high 600s. Sometimes FHA is a lot more competitive on rate.
Yep.
But it's a case by case basis, man, for sure.
Yeah, that makes sense. Somebody asked, I got to find it now. Man, there's a ton of questions coming in.
There's
which
a
I
lot of
love.
really good questions. Yeah, I'm seeing them pop in.
Yeah, make sure you guys keep dropping them in here. Here we go. So this is a big change. This is I think a huge change specifically for Orlando, right? So this isn't just national. This affects Orlando in a really big way because so many people have Airbnbs they've bought here, second homes they've bought here. And so talk to us about the difference between the LTV, which is the loan to value. How much money do you have to actually put down on a second home now?
So you still only have to put 10% down, Ken, on a second home. However, they are increasing the interest rates on what they're calling second homes. So they're making it, the interest rates historically for primary residence and secondary residence have been about the same because it's for personal use first.
Sure.
The investment property loans have the higher rates and higher costs because they're for income purposes. So now, because especially, I mean, it's happening a lot in Orlando, but all across the country, people are buying secondary residences because they can work remote, do whatever, travel a little bit. It's a new world. I mean, everyone can hop on an airplane for $50 on Spirit now. You can go to different places.
Right.
So, people are doing that. And what they're doing is they're using their second homes a little bit and they're renting them out short-term a lot, which you're allowed to do. It's fine. But the real qualification and the way that people are able to make those monthly payments is based on that rental market. A lot of people probably could not afford to have their primary residence and a secondary without some of that supplemental income. So lenders are seeing that, they're getting data that's saying, hey, a lot of these second homes are being rented out. We need to start doing these with a little bit higher risk assessment and them like investment properties, but you can still get away with 10% down on a second home. The difference in a second home and investment property that's good to understand is like, if I live in Orlando, like say I live right downtown Orlando and I want to buy a place in Lake Nona that's 15 minutes away, like that can never be a second home. Like, why would you need to have two primary residences or like a secondary vacation home? Now, if you're going to New Smyrna Beach, like, yeah, it's a beach condo, like that can be qualified as second home. But when you're trying to buy right near you, that's always going to be investment property.
Interesting. What's the stipulation? So like we live like in the Horizon West area, and we've been thinking about buying a lake house in Mount Dora because for one, I believe in the area, and like but it would be something that we use for friends and family and probably us on the weekends. How far away would that second home have to be?
Yeah, it's a good question, Ken. It's usually the standard is 50 miles. However, like I use New Smyrna as an example because I think it's like 35 miles away. Like that makes sense. Like I want a beach condo,
a beach house.
What's that?
Like a beach house kind of thing.
Yeah, and they look at this stuff. Like they look at like, okay, you have a 4-bedroom house in Orlando. Like they're gonna look at your primary residence and see like what the thing is. And like you're buying a little condo at the beach. It's like, okay, it's obviously a second home. But if you have a house in Winter Garden area and you're looking to buy in Mount Dora that's 12 miles away and it's a similar property type and stuff, they're like, wait a second, what are you really doing here? The more affluent someone is, and you like some people have like 5 houses, right? Like, and they don't let anyone live there. Like when it's a special exception like that, you can talk to underwriting, get a letter of explanation, explain when you see someone that has like large income or a ton of like retirement assets or owns businesses. Sure. There are some exceptions there, but the standard is 50 miles.
Okay. Good deal. All right. So this guy, he dares me to pronounce his name. Dave from Loughborough. Loughborough. Yeah.
That makes sense. Definitely borough. It's definitely, like Edinburgh.
Like tough borough, but Loughborough. Oh man, I'm probably butchered that. But anyways, thanks for hanging out live from the UK. That's awesome.
All right, Ken. Yeah, I did have one that I wanted to. If I could just, there was a question here that was about should I use VA or conventional?
Yeah.
If I could touch on that real quick.
Yeah, that's a big one.
Erstim Nivek asked that.
Go ahead.
So yeah, VA is a great loan product. Like if you qualify for VA, I would strongly encourage you to look at it. A lot of people are pushing back against this because it's such a competitive market. It's like if I offer VA and someone else offers conventional, they're always going to take conventional, but that's not really the case. What a lot of sellers are looking for is a willingness to say, okay, I'm going to pay full price for this. And, say it's listed at 550 and we go, it doesn't appraise. I don't want to have to lower my price as a seller. I want to know that you're going to still come to that 560, even if we're at 550, which you can do on VA. We can pay above appraised value. So you can utilize your 0% down VA, no PMI, low rates, fantastic loan product across the board, in my opinion, better than conventional. And then you can still, I'll call the listing agent when we want to make an offer, have whoever your mortgage broker is, have them call the listing agent, explain like, yes, this is a VA buyer, but guess what? They have excellent credit. All these things are going on. And you see that we're willing to, 20K gap above appraisal or whatever. So don't shy away from it just because you're that like the offers aren't getting accepted. It's a great loan product. And they can
so that's a big one. So and the VA, for those that don't know what VA is, that's basically if you are a veteran and you have your benefit available to you, you can go, essentially zero down. And one of the things, I know last year we were running into many listing agents and sellers were not wanting to accept a VA offer because they weren't putting any money down. And they were most worried about the appraisal, right? That's the big one. So it was like, if you're buying a $500,000 house, zero down, and it really, the appraisal is only at 450, do you have the money to cover the gap? And most assumed that because you're putting zero down, you don't. But what people were just saying was like, hey, listen, I'd rather keep the money in the bank, build a pool after the fact instead of putting it towards the down payment. And so you can actually, like somebody on my team just got one accepted. It was VA. She ended up putting $75,000 appraisal gap coverage in there, but still a zero down payment because they're like, hey, they have the money in the bank for essentially they were hoping to build a pool. But they're basically just signaling ahead of time, like, hey, listen, just because we're putting no money down on our mortgage does not mean that we're a less qualified buyer.
Exactly.
And that's what's really big on our team. And like, talking to the listing agent, which is so funny, how many people submit an offer to me as like, if I'm the listing agent, they submit an offer to me without explanation, without ever picking up the phone to call me. They're just like, hey, it just offers in your email box. They didn't even, tell me anything about it. So if you're just reading over the facts, like, hey, the facts are they're putting zero down. But if they call me and say, hey, listen, they're willing to do X, Y, and Z in order to get the house, I think VA can be just as competitive as conventional.
100%, bro.
Yeah. So one of the, somebody mentioned here, man, there's a lot of amazing ones coming through here.
So many good questions.
You guys are killing it today. I love this. So Wiggy says, did my rental condo finally get completed? Wasn't it due back in October? Originally, it was due back in September. We're closing this week. Thank God. So finally, that's the condo. Greg's helping me close on a duplex this week. That's awesome. Somebody else had mentioned, actually, it came through a couple times here, so I'll just kind of mention it in passing. The whole like builders on-site mortgage reps versus working with somebody like you. I think that, I don't want to steal your thunder here, but like, I always tell people, get pre-approved with the on-site person because they're going to force you to anyways. And then call your lender, and whether that's Greg or whomever, and say, listen, this is the deal they're giving me. They're going to give me $4,000 towards closing costs, and the rate they quoted me was 4%. Well, you have to call somebody else and say, Greg, hey, this is the deal I got, right? You probably get that call a lot, don't you?
All the time, man. Yeah. And I'm more than happy to do it. It's like I said, like somebody else might be a better fit for you. And a lot of times those builders lenders are when they have those nice incentives, but it's also good to talk to just a second person that you can get a second opinion on it. And it's like, hey, this rate seems a little high. Like, is that what's happening? Like we had a recent discussion about that. It's like, hey, like, tell me what's going on here or whatever. That just gives you that peace of mind. And a lot of times their incentives are better. There might be a slightly higher interest rate, but they're giving you $5,000, $10,000 towards your closing costs. Like that's awesome. Like you got to take advantage of that. Would you pay $25 extra a month for 10 grand right now? Yeah. I mean, heck yeah, I'm going to do that all day. So that's literally what it is in theory. Someone's giving you a $10,000 check and you just have to pay them back over 30 years, $25 a month, like at a small rate. I mean, it's really a lot of times a no-brainer, but I'm always more than happy to give that second opinion.
That's awesome. Bree Tucker, speaking of Mount Dora, our Mount Dora area specialist, Bree Tucker is checking in. What's going on?
Bree's on a little late because she had too much fun last night at the Magic game.
Yeah.
Happy birthday, Bree.
Happy birthday, Bree. Congrats. All right, so let's see. Oh, hey, Katie says, finally caught alive. She's retiring from the Air Force this year. Thank you for your service, and planning to move to Cocoa Beach or outside of Orlando. Florida, Central Florida's the stuff, man. I tell you what, there's a lot of people. My newest video coming out Tuesday is going to be about, get this, man. So the Orlando Economic Partnership put out a study back in 2019, like right before the pandemic, late 2019, right? Mm-hmm. And it was their guesstimate of what they thought was going to happen by 2030 in Orlando.
Okay. Yep.
And it's kind of interesting to see like how, like they said, hey, we're probably going to see roughly 1,000 to 1,500 people move to Central Florida a week for the next 10 years. And so here's what our populations look like. How many people, so I took this report and I kind of dissected it. Okay, we had a pandemic, we had, president change, we had economies kind of changing left and right. So how many people do you think moved just to Orange County, where Orlando's at, every single week on average in 2021?
I don't want to know the number. I mean, over 1,500, right?
No, so it's 1,000 just to Orange County, and then it was like 1,800.
So 1,500 was a state.
So they were saying 1,500. They thought in like Central Florida, so like Polk, Orange County, Seminole County, like all the five kind of metro.
Yeah.
Right?
And just so Orange is 1,000.
Just Orange was 1,000, and it was something like 1,800 or so, like for the metro area. So I was like, you think pandemic hits, it's probably going to slow way down, but no, instead of that, it just kind of continued to take off, which has been so wild. So wild. What's going on? Here we go. Here's a new one, right? So we heard about no doc loans all the time in the recession, right? 07, 08, 09. These were very popular. Do you see any no doc income loan for investment properties and or personal properties?
Yeah, so we do have some products, Ken. And the big difference in what happened in like 05, 06, 07 before the crash was those no doc loans were low down payment too. Really high loan to values.
Zero down, no income.
Right. Like that's just crazy stuff. Now you can do no income loans, but you got to have 20, 25, 30% down a lot of those cases. There's a great one called the NONI, the no owner, no income. It's for investment only. And basically they do a debt service coverage ratio. It's called a DSCR loan, where they get an appraisal and they say the fair market rent for this house is $2,500. As long as your mortgage payment is $2,499 or less, it qualifies with 20, 25% down, depending on if you're a seasoned investor, interest, credit score, things like that, of course. But yeah, those are great products. And then I've heard of some ones on primaries, Ken, but I think they're like 30 or 40% down with no income. But they do exist. So if someone's interested in that, like, hey, I'm self-employed. I have money moving a lot of different places. I can't show my income on tax returns and stuff, but I have a lot of cash. Solution. So we have that stuff for sure.
Got it. Cool. So, sorry, I keep going through it. I'm trying to, this is, I've been doing these shows for almost a year now, and I don't think we've ever had so many folks comment, which is flipping awesome. Ned Kelly, who's one of our regulars, says that you look very knowledgeable, but you look you're still in high school.
I did see that one. Thanks, Ned. I'll take it as a compliment, man. You should have seen me 4 years ago before the mortgage business got to really I look like a teenager. So,
oh man, this kid. And honestly, this business ages you pretty quick. So the fact that you can still look like you're, you got it together, I think it'll be good. All right. So Spencer and Fam has popped in a few different times talking about condo hotels. So he's talking about, really Evermore is a really big development that's going to be, they're going to have some condo hotels. There's also the Grove is really big. It's actually in Winter Garden technically, but it's like on the border of Kissimmee. So they were able to sneak in some short-term rental condo hotel zoning. Do you handle condo hotels? And if you don't, do you have any insights onto like purchasing one that's maybe not cash?
Yeah, we do, Ken. We do them. I haven't done a lot of them. I don't think I've done one in over a year. Maybe done one or two, been involved in it. Yep. They're just a little tricky, man, because if it's a true condotel and like there's a front desk and like full service and all that, and you're expected to rent it out a certain portion of the year, like those are going to be minimum 30, 35% down. Yep. Sometimes even 40% down, regardless of occupancy, whether it's like, hey, it's going to be pretty much my primary residence or a secondary home or, investment. So they're just more challenging deals. You got to go through more who get those those condo docs back from the association detailing like all the, restrictions, all that kind of stuff. But they are doable. It's just large down payment. That's what happens on a lot of these loans. And that's what I love about the difference in the new mortgage market as compared to like 06, 07 is like, they're still the same properties. Like you're still having single family homes, duplexes, apartments, like condo hotels, all this stuff that we had back then, but it's just more money down. And that protects everybody because it's like you have a lot of money and equity in this property. If you can't afford it anymore, you can sell it. You can even fire sell it and sell it way short, pay off the bank, get your money back, new owner comes in. So that's what's really great about this market. But yeah, condo hotels are great, man. You can make a lot of money on the short-term rentals and stuff. They're just a little more challenging on the mortgage side.
Yeah, I mean, I'll almost push back a little bit on your last point there. I mean, I think that they're great if you want to just drag and drop your stuff. You to pop in, you want to be able to leave, lock and go. Someone else manages for you. From an investment standpoint, they kind of suck. I mean, if you're paying cash, you can get a good ROI. But if there's a mortgage in there, like the interest rates are a little bit higher, the HOA fees are a little bit higher. The on-site staff that rents it out for you, they charge you a ton. And so, yeah, like they charge you like 30 to 40% some of these places just for managing like the bookings from the gross revenue. So like if you have a mortgage, you're probably losing money on an annual basis. And so I think that's why a lot of these banks, like you mentioned, like if you want to fire sale a condo hotel, it doesn't happen really super easy, which is why they ask you for a bigger down payment, I would guess.
Right.
But yeah, most of the people pay cash though. I don't know a lot of people that are getting a condo hotel with a mortgage, which is probably why you don't get a ton of calls.
It probably is because they look into it and they're like, wait a second, like it is so complex, the rate's higher, down payment, I might as well just pay cash. So yeah. I found that a lot.
Agreed. So here's something creative focus. I like the creative. I had to think about it for a second, but then I was like, that's a creative name. Potentially, he said, potentially a stupid question. Can I assume all cash offers for home purchase, new or existing, is perfect for today's fast-paced real estate market in Florida? Anything negative about this? So I don't know that. I mean, so all cash purchases are great, right? You look at from a listing side or the seller's perspective, they love to see a cash offer because it's just one less contingency that they have to worry about. But I would argue that you can be just as competitive with a mortgage if you're doing something with an appraisal gap. I mean,
absolutely, man. Yeah, I mean, cash is king, right? Like everybody loves cash, like you said. Like the final contingency that comes into play in all these transactions, mortgage. We're always waiting on the mortgage. It's always my fault, man. Like always waiting on that package, waiting on those final figures. Like, and that's just the nature of the business. Like mortgages are challenging to get done, so cash is better, but I mean, it's been a while since I've really had one of these, but we've definitely had some in the past that I can't recall off the top of my head, but I called a listing agent and we're going up against cash, but we're offering more, offering that appraisal gap. I'm like, hey, they're like, cash is closing in 14 days. I'm like, let's do it in 22. I don't need 30 days. We'll do it in 22 days if that's what's really important. And that back to that mortgage company, mortgage broker versus bank question earlier from Rob, it's like, that's something we can do. Like banks are like, no, it's 30 days or 45 days. We can't adjust anything. Like on our side, we have that flexibility that if it's something like that to get the offer one, we can make that happen. So
totally.
Yeah,
totally. So Orlando is a huge hub for like medical professionals. Like we're getting so many inquiries on people moving here to work for Advent Health, Orlando Health, all of these like little mom and pop shops getting bought up, and then they're recruiting people to move here. And so this is a really good question. So any suggestions for medical professional loans, like a doctor loan? More often it's called.
Yeah, the doctor. Yeah, so those are great loan products. Honestly, like I think Truist Bank is a really good one. They used to SunTrust back in the day. They used to do $0 down. I think now they're requiring a down payment as well, like 5% or 10%. But that's a great product. We have one as well. Ours is going to be in the jumbo category, minimum 10.01% down or something like that. But we can exclude your student loans from your debt to income ratio calculation. We can use like job offer letters for like, say, a lot of these doctors, if they're already practicing somewhere and they're transitioning, it's a long transition. Like those job offer letters are like 100 pages of all the disclosures. They're not starting for 6 months. Like, okay, even though you're not starting for 6 months, I know you want to get your family here and do things. Like we have more flexibility with that with doctor loans, physician specific. So
cool.
Yeah, those are great products, man.
Cool. Speaking of interesting products, and for those of you guys who don't watch, like you guys are getting like a masterclass like Greg has his MBA. I just like do this stuff, so much. I'm just grabbing his knowledge along the way. So he's a smart guy. So Bree asks, talk to us about the depreciating assets loan. I think that's a very interesting product that not a lot of people know about.
Yeah, it is. It's awesome. So there's two sides to the asset depletion, we call it. There is a Fannie Mae conventional one where if you're of retirement age, you can use percentage of your overall retirement. So if you have a 401k or an IRA with, $500,000 or $750,000 in it, you can it's a formula, but you can take a portion of that says, okay, now I'm taking $4,000 a month income based on those assets that I have. That's of retirement age for a conventional loan. So you can still do like 5% down on that product and get the best rates available. It's awesome. And that's with someone that's retired, that's like living on fixed income Social Security. Like you can use that additional asset, which is great. And then for people, I actually just did one for a lady last year that she was like 40 years old, did really well in stock markets, retired. She's like, I'm retired, but she didn't buy her house before she retired. She retired first and then went to buy her house. And if you're under retirement age, I want to say the minimum down payment was 10%, but that was like a slam dunk. It was like we used 33% of her overall assets and then divided by 12 months or something. Like she had huge amounts of income with like not a lot of assets. It was like easy close, like 30 days right on the spot, minimal docs, like just show your IRA. It's a great product. So I always tell people like, because that's when people are trying to make a switch. They're retiring. They're going from, making a big salary to now going to Social Security. But a lot of cases, they're not immediately drawing from their IRA or 401k. I'm 66 years old. I got $1 million in my IRA. I don't want to start drawing on it because I have enough money saved up, but they don't show that proof of income, which is the biggest thing really in qualifying for a mortgage, is showing proof of income. So that's a great product that we have to create a solution for that.
No, it's super cool. Very, very cool. Here's a good question. Joel's been asking a few questions. I want to get to his. So he asks, do I think interest rates increase will cool down this hot market? Do I think interest rates will reach 4% by the end of the year? Who knows on the 4%? I mean, you might be able to talk to that better than I can. But in terms of what's going on in our current market, I think that this interest rate hike has pushed a lot of people off the fence into the market. We wrote an offer last week for like $80,000 over, and it was a bigger house, but like 80,000 over. We missed out, and we weren't even the second or third in line. I feel like all of our listings are getting crazy multiple offers. One of the agents on my team told me she was against 47 other offers on a deal, and so I think yes, and so. Every Tuesday, my team and I, we have these meetings and we talk about how do we keep our buyers motivated? How do we keep ourselves motivated in a market where you're going against potentially dozens of offers? And I think a lot of it is just like keeping the prize in front of you, keeping the understanding that this is going to pay off. And I don't know, what do you think about that? You see, I'm sure, a ton of pre-approvals that you write for buyers where they miss out. What are you seeing out there from buyers in general, their attitude?
Yeah, no, I mean, a lot of buyers, I feel like after the first few, when they're dipping their toes in, they're like, oh, I'm going to offer 20,000 below list. And then they like get smacked and they're like, we didn't even get an email response back to our offer. Like they just threw us out.
What's up with the crickets? It's so quiet in here. What happened?
Yeah. And then they just like all of a sudden get really serious. But you're right. You're absolutely right. That's a great perspective to think on it. Like the people that have been on the fence that like I've talked to or maybe gotten pre-approved, are like, oh, I'm going to take my time, whatever, maybe thinking sometime next year or summer. Now that the rates are starting to go up, people are definitely like, oh, I really got to act now. But to the one point that Joel made about, do you think interest rates could reach 4%? Sometimes now they're already getting close to 4%, just depending. Like it's really increased a lot from like a low 3% range to now like high 3% pushing 4%. But I do want to, and everyone says like, now's the time to act because we know that they're still there. They could continue to increase. But I want to give people a little bit of like confidence and relief that like when it happens this fast, it usually won't happen this fast again. So I don't think we're going to go like, if we're pushing 4 now, I don't think we have a realistic chance to go to like 5 this year. So I don't think like we're going to go astronomically high. I think that you could see interest rates, we'll have to pull this clip back up in June, July, but I think you can see interest rates being higher now than in 6 months, because I think that what happens is as the overall economy maybe kind of pulls back a little bit, you see some more of that stimulus, the Fed helping out, some of those things, pulling back what they said about the rate hikes and things like that. I could see that happening. So I wouldn't have people panic. I think a lot of people got into panic mode with the rates. 4% is still a historically great rate, right? Like,
dude,
my best clients in 2019 were getting 4%.
Bro, I remember I remember my first mortgage I was like 18 years old, and it was like 6%. And I was so excited. I was like,
Right.
I remember sitting there, people were like, "You're getting a really great rate." And I was like, yeah, this feels good. This feels really good. So let's see. I got a couple other things here. Let's see. Sorry, trying to get through all these questions. Freaking love it. Do you have another one you wanted to jump in on? Spencer says that he's been following along since the button-up days. So let's show what that looks like. That was me. Man, when I moved here from Detroit, it was like, for one, I had a couple extra LBs on, but then I also from Michigan. Like, if you lived in the Midwest, New York, even East Coast, like, you had to wear a suit. Like, you had to wear a suit, or you weren't taken seriously. And then now here I am. I'm in a t-shirt most of the time, and so are my clients. And so that's kind of like what you have to look at. But so, hey, Greg, if people want to get a hold of you, and we're not going to wrap up yet, we still have maybe 14 more minutes. So keep dropping your questions below. But people want to get a hold of you just to ask questions or get a pre-approval. How do they get a hold of you?
Yeah, the best way is my cell number, and that's 407-619-2488. I don't know if you can throw it up in the comments or anything, but
let's see. She said
407-619-2488. That's my cell. So call, text, even like I said, that was a big thing. Like, I'm available on the weekends. Like, I was working some applications this morning. Like, that's when people are out, like, 9 to 5, I'm available, of course, but a lot of people are working during that time. So if you need to call me after, 6, 7 o'clock at night or on a Saturday or whatever, that's my text or my cell phone number. So just text me. Like, last night I was in the Magic game. I was able to get back to a lot of people, but I'll call you back first thing Saturday morning. We'll make things work on the weekend. And then if you want to follow me on Instagram, my handle is Greg Matthews Mortgages.
Cool. So let's talk a little bit about the real estate market in general. What's going on? We got a lot of just questions. Well, more specific questions, I guess, instead of the global questions. So any news on road constructions, Fleming Road to 27, and the Hartzog realignment. So the Hartzog realignment's already not done, but it's darn close. If you guys don't know where Hartzog is, it's over by Flamingo Crossing, Western Way, like the back end of Disney. They're basically taking this road, which used to drop really low. Let me see if I can't pull up the screen. It's impressive how they just moved this entire massive road, bro. Like, I was like, you drive over there and it's, let's see, and they're doing all of this because Disney and so many builders, Pulte, Toll Brothers, they're all putting in a lot of money into the area. And so I think it's a really good spot. Hold on, let me see if I can show you guys. Here we go. Pull it up on the screen. Boom. So Hartzog, Western Way. So you've got Hartzog right here. Flamingo Crossing used to drop down here and then kind of like down and over here. And this is where the Grove is. So that's that condo tell that we were talking about earlier.
Yeah, I've been there before. Okay.
You've been there? Yeah. And so now the road kind of like comes back up and over here all the way to Avalon. So they moved it significantly and it's open. You can kind of drive back there because over here you've got the Toll Brothers neighborhood. I just found out just this week that KHOV is going to be putting a new neighborhood right down here. And so when you think about, man, this whole area used to be not desolate, but man, there's really not much going on in this area of Winter Garden.
Yeah, I want to say I went to the Grove when it like was first getting like built even like 3 years ago and maybe 4 years ago. And like, there was nothing out here. I'm like, what is this big resort out here? Like,
yeah, it was kind of nuts, man. So now the roads moved. The neighborhoods are finally going in. They're selling homes at Ovation by Toll Brothers. And my homes just bought all of the land next door and across the street. So they've got another 600 homes, which is going to be next to Ashton Woods. There's a good like 2,800 homes that are coming over the next 2 to 3 years in that Hartzog Avalon area. And it's wild. Have you been to Flamingo Crossing lately? I know you live on the other side of town, but
yeah, no, I haven't.
So it's insane. There's like the Starbucks is open, Target's open, Five Guys is open. They've got like, a dozen sort of new shops that have already opened, and there's even more coming. Hash House Go-Go is opening up. I'm stoked about that. Nice. But so Andrew, what's going on? Good to see you, my friend. Town Center coming in. I don't know about the Town Center popping out yet. I haven't seen any permitting for that. I would guess that they're going to kind of wait till some of the houses are finished, much like Hamlin. Hamlin, they built out all the houses first, couple stores, and then they really went in on building out that Town Center. My guess would be the same happens over there. But you're not too far from Flamingo Crossing, so I'm sure you can enjoy that. What other kind of things have you seen, man, pop up new construction wise that you were like, whoa? Have you seen anything lately you've been driving by?
Man, I stick to the I-4 corridor a lot, so I'm really in mostly a developed area, but I'm hearing St. Cloud is just popping off right now, man. Like,
dude, yeah. This person asked specifically looking to buy or St. Cloud. We're looking between
Sunbridge. Yeah, I heard about Sunbridge. Okay.
Yeah, we did a video on Sunbridge. It did extremely well. There's, I mean, that whole area with the new Westland Park area opening up. For those, if you don't know, Greg, so Sunbridge, they've got a new neighborhood. It's looking very similar to Laureate Park. A lot of the same builders. It's going to be David Weekley, Ashton Woods, Kraft Homes, like good builders that they're doing over there. So yeah, that St. Cloud corridor is going to be pretty insane. It's pretty nuts.
Crazy. I keep laughing at Ned going in on me here. He said when he's not in school. Ned
Kelly
Thanks, Ned.
He's the champion of trolls, and I love this dude. So what's the name of the community KHOV is going to bring? Let me figure that out for you. It just said KHOV building permits. It didn't say what the neighborhood was, but I'll drop it in the comments. There's also another one by Dream Finders. If you guys don't know, a lot of folks have asked me in the comments from our last lives when I've been talking about Horizon West and what's coming over at like the Seidel Summer Lake Park. There's this huge sign by Dream Finders that says that there's a new development coming, and people were getting so excited about it. Then I've pulled the permitting, and guess how many houses that they have permitted for the entire neighborhood? 57. It's like not many. It's like, compared to like Sunbridge at 25,000, there's really not going to be as many.
Just a little custom area.
Yeah. Well, that's what they said. They're actually going to go in on like a little bit higher end houses, like starting in the 7s, kind of going up from there. But I was hoping for like another massive neighborhood, and then nope, small one. Let's talk real quick. Somebody asked, I lost their comment, so I apologize that I don't have your name here, but someone was asking about when our annual pass is going to return for new people. And I looked on all the blogs today, actually preparing for our live, and this is really what I could find. Disney's Know Before You Go still says, we're pausing all new sales of annual passes.
Slide it in there.
Yeah. All current pass holders can renew, which we did this past week, which we were happy to do it. But then the spokesperson says sometime in 2022. So right here, sometime in 22, they're going to come back open, which could be frustrating, man. I mean, a lot of people move here. A lot of our clients move here because of Disney, and they're like, now I can't even buy an annual pass. What's up? It's going to come back.
Huge impact. Yeah.
Yeah. It's going to come back.
Yeah. Oh, it will for sure. But that is crazy. They're pausing that right now.
Yeah. Someone asked if we put these back up for a replay. We definitely do. It'll be up in within 10 minutes or so. I don't even edit it. We just kind of throw it right back up as it comes through. We leave all the comments in so we can kind of keep rolling. What else here? So the Cottage series by David Weekley. I mean, so yeah, they've got some in Claremont. They also have some in Oakland Park, which actually somebody else just literally asked, what about the Oakland area? Mm-hmm. So the Oakland area, I think I'm really bullish on that area. Just outside of Winter Garden, you're 10 minutes from downtown. Like Oakland Park is amazing, but they have a Cottage series there as well, which is kind of like the rear entry. You've seen these, Craig, I'm sure.
It's got a what entry?
Like a rear entry, like the garage is in the back.
Yes, I have seen some of those.
Yeah.
Okay.
Yeah, so they're a little bit smaller footprints, like 0 lot lines. You see a lot in Celebration, so they do a really good job. I mean, I think that these developers, they're paying a ton of money for land, and they're like, hey, at the end of the day, they have to make money. That they're not doing this for charity, and so they're like, how can we pack in as many houses? Well, you get rid of the driveways, and these wide houses, you make them a little bit skinnier, put the garage in the back. And that's how they do it.
So
but
both sides of the street with that side off street with the garage on both sides, I think. We had a client out there that we had a closing at their house. I remember that a few years ago.
Yep. Yeah, exactly. So Joel asks, anything new in the Celebration area? So, I mean, there's Island Village. That's really what's new. There's actually 2 new hotels going in Celebration, which I was surprised. I think it's like they're not even like super custom. I was kind of shocked. Do you get a lot of people looking in the Celebration area?
You used to have a ton, I feel like, man. It's kind of fallen off a little bit in Celebration. I mean, a lot of people now, it seems like, are starting to go out to the newer developments because like Celebration doesn't have a lot of new stuff, right? Like you just said. I mean, So people are going to the winter gardens of new construction, and Lake Nona that's blowing up, and Davenport, St. Cloud, all those areas where we're seeing a lot of new developments, which has taken a lot more of the market share for sure.
Yeah, exactly. Here, I'll show you. This is yeah, I agree. Davenport is just kind of insane. This is the new hotel going in. It's a Homewood Suites. It's probably the nicest Homewood Suites that exists in the world because it's in Celebration. But I was kind of like, oh, Homewood Suites in Celebration, interesting. But this is what it's going to look like. This has just got approved by the town hall and the county. So that one's coming up. But it's interesting. There's only one hotel. I think it's one hotel in Celebration. Yeah, one hotel, the Bohemian downtown. So it probably needs a little bit more. Yeah, I don't know. We'll see. What's going on, Wesley? Fired up for Orlando. Come on to work for us, man. We are definitely hiring. By the way, we put this out. I was telling Greg this just earlier before we started. Like, we're hiring experienced agents on our team. If you're looking, we're also hiring back the office kind of people. So if you have any like inside sales experience, you have any sort of like office experience, and you've been in the real estate space in one way or the other, mortgage, title, real estate, insurance, we are hiring. So careers@pozekgroup.com. We are growing.
Let's go.
We're growing, man. It's been so much fun. It's been awesome, an amazing time.
Love to see
All right, so let's get a couple more questions in, and then we're gonna wrap up. What's some? I'm going through all these comments because I feel like I've missed like 30 of them.
They've been flying in, man. Great interactions today. I love it.
Yeah, no, it's been really good. So talk to us a little bit about where your predictions are for the rest of the year. What do you think is going to happen?
Yeah, I think we're going to have a really competitive market still on the buyer side, which is definitely a good thing rather than having too much inventory, if there's a problem. But I heard like nationwide, there was less than 1 million homes on the market. There was like only 900,000 or something.
Yeah.
Is that right?
Yeah.
So a big shortage versus back when the crash happened, there was like 0.5 million. So we're not anywhere near where we were. And a lot of people worry about the interest rates rising. But like I said earlier, man, I think that because everyone kind of expected interest rates to increase at some point.
Yeah.
The fact that it happened really fast, when we look back out on it throughout the year, it's going to be a good thing, because it's like, hey, we hit that top interest rate. Like, this is the worst. So now buyers are understanding, like, oh, it's only $100 a month. Some people are reacting like that. Like, oh, interest rates went way through the roof and it's $100 a month. I can shake that, And so it's going to be here, or maybe a little lower, I mean, I truly don't think we're going to have any kind of like pullback on demand, or like people not being able to afford it or anything like that. I think it's going to be a great year, man.
Yeah, agreed. Speaking of this year, Joel asked me, did my predictions change now from my last video that I made for 2022? Really, the only thing that might be different is I think I said something along the lines, I thought we were only going to see like a 5 to 7% appreciation. It might tank. 30% last year, right? Which is just unsustainable. Yeah. And that's why a lot of the predictors were saying that we were going to be more like a 4 to 5% countrywide. But when I look at we still have this massive lack of inventory, and so many people popping off the market, driving prices up. I think we might be more like 10 to 15% this year.
Yeah. I would like to see it at 10. That would be a solid number.
10 seems like a good number. It really does.
Great number, man. Yeah.
Yeah. So this is I do this every other week. Greg, just talk about the market watch. So this is the back end of the MLS for those of you who haven't seen it. And I just like to point out how many listings are coming on. So we had 618 new listings. This is in the past 7 days, right? It says that this is just a little glimpse of what's going on. And then I like to point out, did we have some price decreases? That's an interesting one. I still believe that you have to price your home right in today's market. You can't just price it at $1 million because you want $1 million. It needs to actually command that. Back on market, this number is actually starting to drop. I think maybe buyers and sellers are starting to get on the same page. I always talk about, mortgage denials are one thing, appraisal shortages are another, inspections going wrong, that's another. That's the reason why something would come back on market. But if you look, new listings 618, sold 691. So we're still trending and getting a stronger and stronger and stronger market. So I don't think that the market is going to slow down in anytime soon. So my prediction for this year.
So are you seeing that a lot, Ken, where you're seeing more sold than new listings?
Yeah, and a lot of that, what that is some new construction. They'll throw it on in market pending. So you'll actually notice here, there's a huge discrepancy on the pending number 1193. like twice as many homes went pending as new listings. And that's because builders were like, list them, pen them immediately.
Yeah.
And so they're not like actual listings. They're like, just they put them in for market data only, just to keep the prices, the data sacred, if you will.
Gotcha.
Yeah. So somebody asked me, what are my thoughts on Story Lake Resort as an investment, short-term rental? I think it's a good location. You're not too far from the parks. It's newer, right? I'm not a huge Lennar fan personally. I think there's a lot better builders out there, but for the price point, it's hard to beat. So I think that's a good one if that's something that you're thinking about.
Where is that at, Ken?
Let's see, Kissimmee, like not too far. It's like kind of almost if you're headed towards the Loop, if you know where that's at. Yeah. So someone mentioned this is your background. So I want to hear where you think. So Seminole County, what seems to be one of the quieter counties. I always say there's land out there, but it's just not like the more popular, like Lake Mary, Maitland, some of these places out there. There's just not as much going on. Do you get a lot of people reaching out for Seminole County?
Yeah, but people that already live there, they're renting there, or they're just trying to like upsize because they're growing their family or things like that. A lot of that area was already developed and built out in the 70s. So you're seeing a little bit of like tear down and like revamp or like renovations and stuff. But right. I mean, I grew up like Seminole Orange border up there in like Longwood area, and I still love it in that area. But it's definitely a lot different than going south Orlando near the attractions where all the growth is. So it just depends on what you're looking for. Like, seems quieter. Yeah, it really is. Like if you're not into like the theme parks and like a lot of the travel and hospitality industry and all that, like, yeah, it's a beautiful area. That's where I grew up. I loved it up there. So there definitely are opportunities up there. But yeah, a lot of people that are buying there, they've already been renting there for a few years, it seems.
Yeah. There's not enough land for like 1,000 homes to pop up, right? No. It's like mostly tear downs and, or like you said, single family kind of things. Someone did mention, so what is it called? The K-Hov neighborhood, and they're right. So it's Osprey Ranch. I just pulled it up while we're talking. So Osprey Ranch townhomes, this is by K-Hov. This is new over in Horizon West. They just got it approved. So $14 million towards townhomes, $18 million towards homes, and that's just going to be the first phase. And that's still in the design development. So you've got that just happened this week. That's pretty new information. What is it, the 22nd, something like that? So yeah, that's going to be good. That last piece of Horizon West is going to be interesting because once that's built out, Claremont's the next way, right? And that we're already seeing that right now.
Yeah, it's already going that way, but.
Cool.
Then what are they going to do, Ken, in 2030? Let's get your 2030 predictions.
My 2030 prediction. I think Osceola County is going to be just continue to go nuts. It's like it was 2 years ago. It was 75% rural, which is crazy to think. You've just got so much land out there that I think they can just build and build and build. Hopefully they do something about infrastructure though, because the roads to get to Osceola County are not super sexy. Yeah. As you can agree. And then Lake County, right? So we're just going to see people continually push out. They have to. Yeah. All right, dude. Well, thanks for hanging out with me. 202 of you guys hanging out with us right now towards the end. I so appreciate you guys hanging out. Follow me over on Instagram. I'm at Ken Pozek. This is Greg Matthews. Interact with us. If you guys have any questions, regardless of the stage of the process you're in, it's never too early to reach out. I have helped people that took them 4 years to finally move here or buy something secondary. And so Greg and I, the reason I think we work so well together is we're both very similar, that we just want to provide as much value as we can. And then whenever the time comes, we're here to help. So
absolutely, bro.
Anyways, thanks for hanging with us, dude.
That was awesome. Thanks for having me today.
You got it. Bye.
All right, brother. Take care.